distribution channels to maximize insurance penetration. Expanding the reach of insurance across India requires innovative and diversified distribution strategies. This session will explore how opening up new distribution channels can significantly increase insurance penetration, especially in underserved markets. The discussions will primarily focus on leveraging existing agents, brokers, bank assurance models to increase outreach and efficiency. Digital transformation, exploring collaborations with non-traditional players such as telecom companies, fintech firms, and e-commerce platforms to reach wider audiences. Developing targeted distribution models for rural areas and low-income groups, ensuring affordable and accessible coverage for all, and the regulatory support needed to take the next step forward. I would now like to invite Mr. Joy Malya Bandopadhyay, Partner, Business Consulting, Insurance, KPMG India, our moderator. Panelists, Mr. Abhay Tiwari, Managing Director and CEO, SUD Life. Mr. Pankaj Gupta, Managing Director and CEO, Pramerica Life. Mr. Vishal Gupta, CEO, PhonePe Insurance Brokers. Ms. Shail Jalal, Partner, Shardul Amarchand Mangaldas and Company. Dr. Ramesh Kumar Satuluri, College of Insurance, Insurance Institute of India. May I request the panelists and the moderator to please take their place on stage. Over to you, Mr. Bandopadhyay.
Okay. I think we are still having lunch. But a very good afternoon, everybody. And today, the morning, we had a few very stimulating discussions. Quite a few points were made on how do we sort of reach the last mile. We talked about products. We talked about awareness. Some of the things that we got to know was that there are people who don't know how to reach the insurance companies per se. They don't know what is the right cover for them. And one of those ads was actually going on where people were asking, you know the math about cricket? Do you know how much life cover that you have? I think if we look at this backdrop, and if we look at how the banking sector has penetrated, the lending sector has penetrated, the time is right now for insurance, as Chairman Sir had mentioned, right? And one of the most critical parts, or the cogs of the wheel, which can enable that is the distribution part. And that is what we want to discuss with our panelists in detail, because what is important, and when we look at distribution, are two things, right? Majorly. One is creating the awareness, because if you go to the last mile typically will need somebody who they trust in, so that the message is delivered. So that is point number one. Point number two is, once the message is delivered and there's a trust, how do you interact and how do you transact? And that is where distribution plays a very, very critical role. So today what I'm going to discuss with my fellow panelists are a few things. One is the models that we have right now, right? And we pretty much know it. LIC is agency driven. The rest of the private sector, if you look at life insurance, is banker driven. If you look at the general insurance side, brokers and direct play a major role, so on and so forth. But what I wanted to discuss with them is the current lay of the land. Is that enough, or do we need more? And if we need more, what is it that we need? That is point number one. Point number two, essentially, and if we look at distribution, training, learning, development, we all know is a critical item. So I'll sort of pick your brains on that as well. And lastly, what I will want to know is models of the future, enabled by technology. How does that look like, and how will the landscape sort of look like? So this is what we want to sort of cover as a part of today's discussion. So what I'll do is, as an opening, I would like to sort of pick your thoughts on the current landscape and what do you see are the green shoots and what do you see are the gaps which need to be plugged. And maybe Ramesh, I'll start from you and we sort of go this side.
Good afternoon, and firstly, just want to thank CIA for giving for this excellent event. I'm sure with all the deliberations what we're going to have today, including all this, the panel discussions, the industry would definitely get the much needed impetus to take this forward, that insurance for all by 2047. Now, when we look at the entire the discussion topic for today about the channel distribution and how is it going to enhance the insurance penetration, so I just only want to highlight 3-4 key segments which perhaps we need to look into and factor that. One is about, again, I'm picking certain cues from the earlier discussion what we had in the previous days panel as well. One is about the millennial group, which is around 34% of the entire insurance population. Now they are digital natives, they are tech savvies. Now the challenge is of course that we cannot have a conventional distribution approach with them. Then we will have to certainly look at digital distribution or maybe a kind of disruptive. This is one segment which I believe that we need to focus on immediately if we need to reach the last mile. The second area which I want to highlight, again picking up a cue from the earlier discussion, is a rural area which is close to 64-65% of the total population. Now, so that's a pretty big but little strange dichotomy, but when we look at the physical presence of branches across the rural, I mean, if you look at the industry per se, there are 20,000 branches across the country. But rural, especially when I'm talking about interiors of rural, tier 5, tier 6, there's hardly 1% rural branch presence for the companies. This is one area where perhaps we can really work on. And also thanks to the regulatory initiative where we spoke about Bima Trinity, which is your Bima Sugam, Bima Vistar, Bima Vahak. All three are going to definitely enable us to have a deeper and wider penetration in rural area. That is the second important segment which we need to focus on. And the third one, which I again want to highlight, is about the informal sector. The informal sector is again around 36 to 37% of the total country's GDP, which again rural perhaps is a subset of the informal sector, but that also need to be looked into if we are in a position to really take care of these three key segments. Then I'm sure we are going to achieve insurance for all by 2047, which is a doable target. At the same time, there's again one more aspirational target to see India as the 6th largest insurance industry across the globe by 2032. That is also absolutely achievable. All we needed to do it is focus on millennial group, which is 34-35%, rural population, which is again 64%, and the informal sector, which is close to 35 to 36%, because the common denominator for all our calculation is again, for all our penetration is a GDP. So hence the prominence of focusing even on the informal sector. So that's a brief from my side. Thank you so much.
No, Ramesh, thank you so much. Shailaja, your thoughts.
Hi, I'm not going to talk too much about, the products or, the distribution from an insurance or an insurance lens. I'm going to talk more from a regulatory lens, given that I'm a lawyer. And, throughout the day we heard all the panelists talk about accessibility, affordability, trust and awareness. And the fact is, there are extensive regulations on all of these. I mean, for awareness, there are regulations in relation to how to kind of reach out to customers, how do you reach the last mile in terms of, advertisements. There are do's and don'ts in terms of who can sell insurance, who cannot sell insurance. And there are gaps, and there are areas where the industry may want something, and there are obviously, bells and whistles which have been placed by the regulator for obvious various reasons. But the point I'm trying to say is that for each of these, so for awareness, all of these, affordability, of course, pricing plays and the competitive factors in the market that kind of, drives the affordability part. And of course, insurers have to, try and make products more and more cheaper, subject to market-driven factors. And accessibility and trust. Accessibility is something which I think everybody's really working on, and that's what we've heard all the day today in terms of various models, looking at focusing on villages, focusing on particular states, different products. So accessibility is key. And finally, trust. And that's where, from a corporate governance, fraud prevention, and ensuring that, there is certainty in cover. I think that's very important, because you can reach out to a customer and sell something, but when there is a event, the question is, has he actually received what he thought he would? And that's where customer centricity and keeping customers first is really important from a distribution perspective. And going back to what the law was, actually we, from 2000 we saw private insurers, being set up, and then there was, there was a de-tariff regime. There was a tariff regime, and then it kind of got de-tariffed. And through the years, in the last, 25 years, we've seen how the market's grown and how the laws have changed. Earlier, for corporate agents, you could only tie up with one life, one general, and one, health insurer. Then it moved to 3. Now it's, you can even tie up with 27 insurance companies, a single corporate agent. With open architecture, things have changed tremendously in terms of what distributors can sell. So given all of this, there's certainly been a shift from, a rule-based kind of a structure to a principle-based. And what this means is, from a regulatory regime, this means that the board of the insurance company has to kind of ensure that they are compliant with the principles which have been laid down. And so there is more, responsibility placed with the board to ensure that all of these factors, accessibility, accountability, trust, they all go hand in hand along with governance. So these are some of the changes which I just wanted to highlight from a regulatory perspective.
No, Shailaja, thank you. And what we heard was the opportunity which you mentioned, Ramesh, the regulatory landscape and how it is principally moving from rule-based to, let's say, a principle-based thing. So Pankaj, now from your perspective, because you have looked at this industry for long now and you have seen how it has evolved, where it is at, is it enough, or should it fundamentally change from a distribution perspective? So your initial thoughts on that, please.
Yeah, Joy, I would take a moment to reflect back on the journey that we have covered so far. I would talk in the context of life insurance in particular. If we see till 1956, India had a deeply fragmented life insurance industry. I would say there was a lot of lack of standardization, lack of trust in the industry. Lots of companies were probably failing also at that point of time. Then 1956, LIC came into being. Till the year 2000, 2001, LIC was the only operator, and India covered a long distance in life insurance in that period. So when we look at today's event itself, CII, it is the 25th anniversary, and the IRDAI chairman talked about IRD also, it is the 25th anniversary. Yes. So in the last 25 years, I would say we have covered rapid strides. This industry has now more than 24 players in life insurance alone. There has been a lot of competition in this industry, a lot of product innovation, a lot of work in ensuring that the products that are being given to the customers are more customer friendly, the processes, the KPIs, the tracking that the regulator has on this industry. All of that has meant that in the last 10 years in particular, there has been a great customer friendliness focus of this industry. What it has all achieved is, first we must celebrate. This industry has made sure that I would say the middle class at least is covered pretty well in terms of the type of solution that they need for their health services, for their retirement solutions, for their protection needs, savings needs, all of that, they are pretty well covered, I would say, today. Most of the companies have shown dramatic improvements in metrics like claim settlement, customer complaints ratios, etc. So industry has been able to serve the needs of the customers pretty well. Now, where we are now and where do we need to go when we look at 2047? I think this is the question we are pondering, but I thought we should take a moment to celebrate the distance that we have already covered in the last so many years. Now, when we look at the next 23 odd years till 2047, the primary requirement, I think Ram also spoke about, things like the rural market that we need to go to, or the digitally native customer that we probably need to address to, and some of those are real challenges for us. If we really have to cover the length and breadth of the country, we have to change our distribution models. The traditional distribution models in life insurance have a certain element of cost. There is a need for finding out products that are more standardized, selling processes that are more, I would say, pull-based rather than push-based. How do we reduce the distribution cost, improve the product's attractiveness at a price point which is affordable for the population that we want to go after? So the ticket sizes in this industry have been at a certain level. How do we make sure that even at, let us say, 1/4 of that ticket size, it is viable to underwrite a customer, to distribute the product, and the customer is getting the right benefits from that product? A lot of work needs to be done also in ensuring that we get the right talent into this industry. While industry has grown rapidly, we also know that the mortality rate of our agents in terms of not surviving as agents in this industry, the mortality rate of our employees in terms of attrition is very, very high. And that makes it an industry where we are already always filling a leaking bucket in terms of the talent input. If you are always working on filling a leaking bucket from a talent perspective, then the productivity is not crossing a certain level. If productivity does not cross a certain level, the cost of distribution remains high. There is also another impact of the financial savviness of the seller and the buyer. If the industry has a lot of attrition, the financial savviness of the distributor also does not go up. So while we grapple with the problem of going deeper into the market, the industry has to become more efficient in distribution, more standardized products, finding an answer to the talent, the perennial talent problem of this industry. One of the ways I see this evolving is to put the life insurance solutions in the context of the overall financial services that a customer needs and a distributor can take to the customer. I think regulator is doing a lot of action on making distribution also more flexible. Lots of things Chalja also spoke about. More is on the way. As we keep working on that, the financial literacy of the buyer, the financial literacy of the intermediary, both go up. There will be a rapid evolution towards with the right vectors that take us towards insurance for all by 2047.
Thank you, Pankaj. And obviously, that's a very good point, because what the industry has achieved is noteworthy in the past 23 years, right? A 15% CAGR over 23 years is something commendable. And also a few very important points that he has talked about, and which is equally important when we look at innovation, is how do we maintain the talent base and how do we grow the talent base? Because if that does not grow, then possibly other things won't fall in place, because you are spending a lot of time in retraining and etc. etc. So that's a very fair point. Abhay, your initial thoughts on this?
I think when you mentioned that certain organizations have particular defined distribution structures, and so I have a slightly different take there, that now most companies are trying to incorporate diversified distribution models, and most of the distribution models will evolve. They will, like, the agency will evolve in a different fashion, and banca will also grow, digital will also have its own place. So, but then, like, the one thing which is emerging as a common theme is, like, people who have multiple products to offer, they are becoming more successful. So if you see in the bank insurance platform, because the customer has a choice to get many things when he comes to the bank or talks as a bank customer, he gets multiple products he can close at one go. Clearly, when it's a broking platform, or maybe it's an online platform or a physical connect with a broking house, I think again they are able to offer a lot of products to compare and choose and decide. So that also becomes a very important reason for success for the brokers as well. The agents also, I feel, because that personalized thing is still working, and in many quarters people like that kind of an approach, so that itself will also. But then I have a feeling that, if you see more and more, it is getting skewed towards multiple products. The second, which Pankaj I think mentioned, that the cost has to come down, so the variabilization of the distribution channels also will evolve. And perhaps in the next few years we'll be witnessing more variabilization in the cost. So that kind of a thing will also happen. Digitization, as Dr. Ramesh also mentioned in the beginning, that digitization will be all across actually. So it is like, in the bank, for example, the insurance company will be embedded in the bank app. Just to, we will have agents who are very tech savvy and they are doing sales on the video or closing more deals on a particular month than they were doing earlier. So the productivity will increase through the digital enablements. So I see digital all pervasive. Basically it will be all across. Variabilization again as a theme or a feature will become very critical. And multiple products. So I feel that IMF, in that sense, many of the agents could have moved to IMF kind of a structure, but perhaps the cost of 10 lakh rupee, as an investment and all also is sometimes high. So if that perhaps can be relaxed, maybe I can see some the agents also having, the multiplicity of the product. As Shailaja said that, if there are 27 companies with which we can corporate agent can tie up, but for an individual agent it is still restricted. So if that also is gradually opened up, and then, or maybe they convert it to an IMF, but that channel will also have its own place. I think that's where I would like to start.
No, thank you. Abhay. Very important points, because one is variabilization to get the fixed cost down, you do more business, you get more. Now, the other thing, and interestingly, from your perspective, Vishal, because we have talked from a regulatory perspective, we have talked from the institute perspective, and we have heard the manufacturers per se. But as a distributor yourself, how do you see sort of this phase panning out, and how do you see the role the distributors is going to play when we look at increasing the penetration and awareness?
Thanks, Mala. Good afternoon, everybody. There's a post-lunch session and AC is very cold, so I'm hoping that you guys are awake. I think first of all, let's look at the green shoots which are there, right? I think my fellow panelists talked about it in terms of how the regulatory landscape is changing, and we have a very, very forthcoming regulator. We're getting lots of support from the government also in terms of to be able to push for 2047 vision. So there are lots of good things which is happening, and I think all of us in this room and industry also recognize that digital transformation is happening, and basically that's going to be the key. But one of the most important aspects, if you think about what Chairman Sir touched upon in the morning, is very critical. Because whenever you're solving for a problem and you try to reach the mass scale, it is very, very important to solve for customer first. Unless and until you're solving for customer first, trust, which has been one of the biggest reasons, if you think about where basically the penetration is not happening at the pace where it can happen. I think the only way to solve for that is basically by building simple products which are keeping customer in the mind. And unless until we can do that, I don't think so that we can basically achieve the scale or basically accelerate the entire digital transformation. Thank you.
No, thank you, Vishal. So I think very pertinent points which we heard from my fellow panelists. The first one that I want to really discuss, and alluding to your point, Ramesh, about the penetration that is yet to be done if we look at Tier 3 and beyond. The first point that I wanted to ask is, how do you go there? Because the point is, the population there per se has a different characteristics as opposed to urban. They might or might not be that savvy, financially at least. But on the other hand, the internet has penetrated, so they pretty much know what is happening from these, let's say the digital world perspective. They will still need people they need to trust on, and that is how the MFI market, if you look at to say, sort of penetrated. So going forward, and if we have to look at that vaster population, which is sort of under-penetrated and has a sort of immense spread, how do you go there? And how do you go there sustainably?
Sure. Thank you. I think one major point which I picked up in the morning discussion is about embedded insurance. I think it has come out very well. If you look at certain providers, like, we started off with IRCTC, if you remember. Then we have one of the panelists or one of the delegate was mentioning about Ola and Uber. Then can we look at other areas? See, what I am saying is when you look at Tier 5, Tier 6, we have grocery stores, we have pharma stores, we have many other vendors. Can we look at a product as an embedded in each and every industry? As of now, it is restricted only to a particular IRCTC or Ola. But beyond that, we have not explored further. Or maybe to an extent a little telecom. So that is one area where we should look at if at all we want to have a deeper and wider penetration. The other suggestion which I have is maybe we can look at some kind of bite-sized products, which we were also discussing. If there's a company, listed company, which has come with a 1 month term insurance, 1 month, or maybe even IRCTC for that matter is only a 1 day, a travel time term insurance. So I think we'll have to explore. Thanks to the regulatory intervention, we have a sandbox committee where you can actually use and file. There's a 3-year window which is given to you. So we need to really further explore on that. Can we have a bite-sized product where we can then reach out to tier 4, tier 5, tier 6? It has nothing to do with a comprehensive financial planning. You buy a SIM card, you get a 1 month insurance. I'm just saying. The third area, which perhaps we can look at it, is then again, not fully connected with the under the penetrated places, but I'm saying the variable part. There are some companies which already picked up variable. The data is available. With the variable, can we start selling it? There are companies which started giving discount on the renewal also. Can we also look at as a marketing thing? Now, the entire rural is connected with internet, or we have smart watches which are coming up. One is going through smart watches. 2 is maybe a product innovation like bite-sized, product. The third one, the first one which I said is the embedded insurance. Can it be looked at? Can we explore in all the industries and all the areas, anything and everything, attach an insurance and start selling it? And that way, in all probability, we should be in a position to reach. Biggest challenge in tier 5, tier 6 is there's hardly 1% presence of branches. And the branch presence, the agency penetration, both are intertwined. Surprisingly, that's the data. That's how it shows. 20,000 branches, everything present in urban, tier 1, tier 2, to an extent up to tier 4. Tier 5, tier 6, absolutely zero. So if these 2-3 areas on product front, if we can really focus on innovation, then I'm sure we should be in a position to reach out to the rural masses, which is otherwise very difficult to reach out to them.
No, thank you. And this being a very pertinent topic, because, and I will like to take first Pankaj and then you, Abhay, because embedded insurance, event-based insurance, 2 questions. One is, how do we make it work, given the journey that we have had as insurance companies over the, let's say, past 10 years, if I just look at it? One is, how do you make it work? Will it ever be at the scale that you will find it viable? And if so, how do you place it there in the last mile?
So Joy, I will begin with the last mile question first. I believe today is an extremely exciting time for all of us in the industry to work on taking insurance really to the last mile. The reason I say that is because the initiative that we talked about in terms of Bima Trinity, the Bima Sugam, Bima Vistar, Bima Vahak, they are really like the railroads of insurance industry. We all know that how India got integrated as a nation when the railroads came into the country, and how even today rails play the important role of taking commerce to the last person in the country. The same role is going to be played by the Bima Trinity once it is fully launched. It takes time to launch such a massive initiative, and the type of focus along with the Bima Trinity that the regulator has on state level insurance plans and creating that architecture, they are really the growth engines of the future for this industry. So I would really look forward to working on those initiatives. These initiatives sometimes are not easy for a single company to work on, but when they are facilitated by the regulator and the government in terms of state level insurance plans, they really create that momentum and that standardization for everybody to work on. The second part that got spoken about was in terms of embedded insurance. I see embedded insurance in multiple dimensions. One of them that Dr. Ramesh spoke about, of course, what we can do digitally. But we have to also see that the type of attachment we are doing on the group products. Like with microfinance, for example, most of the customers get a bundled life insurance product. They are also bundled and embedded solutions if you look at it in with a different lens. If you were to go on the digital side of embedded solutions, I would say the primary need is for a way to ensure that you are not attracting the wrong customer who could have fraudulent intentions when you are going and giving simple solutions. The challenge with easy onboarding is how do you balance that with the risk that could creep into your books if the onboarding was so simple that even the non-desirable elements were able to get in, because one non-desirable element getting into the product can vitiate it for 1,000 other customers. That I think is the key challenge. There are certain models which are going to be effective in this. For example, we talked about e-commerce players, we talked about payments players, telecom players and others. How we leverage the insights about the customers, the data that is already there with these players about those customers, to translate that into potential behavior on the insurance side. And as those models get more and more developed, as the industry gets more and more confidence, the ability to give those bundled solutions at a scale without creating friction, without unduly increasing the cost because of the fraudulent behavior that might be creeping in today, would be the determinant in ensuring that it is going further much, much faster. I would also say that there are other things that we sometimes do not always remember in the same context. Like the government came with something called PMJJBY. That is a very, very strong product that is again on the group platform, if you were to look at it, that is distributed by the banks. Why I say banks is an important part of the whole ecosystem is because insurance as a product, a customer will buy just a couple of times in his lifetime. But with a bank, a customer engages with multiple times within the same month. And the frequency of that interaction means that the opportunity for bringing that solution also is much, much more. And the cost effectiveness is also much, much better. The banks also have a deep insight about the same customers. So I would say creating more products like PMJJBY in collaboration with the banks and other financial institutions so that they can be taken to the last customer through that, again, the railroad that is already created by the banks and other financial institutions would help penetrate further and faster.
Thank you, Pankaj. Abhay, first I'll take your views.
I think, the presence of the banks in the every nook and corner of the country, that itself is helping a lot. And so we are able to reach out to the last mile in that sense. But I feel that if we can tap the potential of the NBFCs, the microfinance institutions, the common service centers, the CSCs, the self-help groups, that will really add to the depth which we are trying. The Bima Vahat as a new initiative, I feel all of this, the regulator is also thinking that how, to connect and to deploy a person from the same Gram Panchayat. Of course, it's like it creates a lot of trust and a lot of confidence in the customer. And if you can have simple products, I think in the morning also this was discussed that simplicity of the products can be a big leverage which you can create. When you embed something together and all that, it should not become too complex to unravel. So simplicity of the whole mechanism and the onboarding ease which we want. We want the PAN or the Aadhaar or one number and to come and then everything should be issued on the spot. Maybe the whole policy issuance and the coverage should start immediately. So those kind of things, can we receive the policy document on the WhatsApp immediately? So those kind of things, we'll have to see that, if we really want micro-insurance to become very successful, then you see the limit also for micro-insurance has been increased from 2 lakhs to 10 lakhs. Now that itself is a big, earlier the cover was 2 lakh rupees, now it can go up to 10 lakhs. So PMJJBY again, has shown huge success. We have like 1.5 crore customers under one scheme. So 18 to 50, the same premium. So now that's the simplicity which you have. So same kind of things, I think in the sandbox side, perhaps the pilot can be done up to 3 years, but the limit is only 5 crores. That if that can be relaxed by the regulator and if we can push it to say 50 crore kind of a number or a premium, then more sandbox pilots I would see that happening in this particular domain. So I think all of these will be required together. So it is not like either or. So it will all together.
Now, understood. Now, very pertinent points, a mix of quite a few things. Now, Vishal, before I come to you, and because both of you mentioned that we will have to take data from a lot of sources, and we need to analyze that. Shailaja, I come to you because how do we govern all of this as we are going down the pyramid, so as to say?
Yeah, of course, that's the elephant in the room. And before I kind of talk about data privacy and cyber security, I actually have another, more explosive point to talk about, and that's paying for the data. Because everybody knows that you can only pay as per regulations to regulated entities, which are, your corporate agents or your brokers and all your, or POSPs and MISPs and so on and so forth, all the regulated entities. Now, Abhay, you talked about reaching out to self-help groups, reaching out to associations, reaching out to other entities or groups who have a lot of data. So if you're looking at villages, gram panchayats, they may not be registered as corporate agents or brokers, right? But obviously they also, they probably play a very, very key role in selling insurance, and they may not be happy with just giving out that data on a pure, like a per data kind of or a per click kind of a payment, but more in terms of commission and payments in terms of the revenue they generate. So I'm sure all insurers here are kind of grappling with that issue as to how do you make the right kind of payment so that they are incentivized enough to give you that data to sell insurance. And that's probably a difficult question or a difficult answer. But the point is, are insurers doing enough to also ensure that it's actually a separate point. Maybe I'll finish that and then go to the second point. But, so what I was saying is from a data perspective, we need to find a solution to make sure that there is a right amount of payment for people to kind of give that data, because data is key. At the same time, you can't, commoditize it in such a way that it is misused. So, a person, all of us get calls where unsolicited calls selling all sorts of products. So, data privacy is key, and there are rules, and there is a Data Protection Act and the DPDP Act, and the rules in relation to that which is going to come out in terms of, and so the enforcement of that once that happens, and that is in place, then there will be more and more onus on insurers to ensure that data is protected. You need consent from the customer, you need consent to use the data, you need to return that data. There are so many compliances in terms of data protection. So that is very, very important from, so data has these 2 points, like, how do you give the right price for your data, and how do you ensure that that data is protected, because very often the data is kind of sold and not kind of protected in that sense. So that there is, and that responsibility then lies with the insurer. So if the insurer is the entity which is, or the insurer or the intermediary, whoever is the licensed entity. So, and for that there are enough regulations. It's just that, and the law is there. It's not that there is no law. Now what is important is enforcement, and a lot of self-reporting is also necessary. It's not always that, you need to look at the IRDA to kind of enforce these laws. More and more regulated entities should do some kind of self-monitoring, reporting. So all of those processes, I think you just need to be more developed and more, mature about these things, and, provide these. And it helps in your governance perspective. The second, one more aspect I wanted to talk about, though not related to data, but is about financial assistance. We are all talking about affordability, but how many of us are we really talking about providing financial assistance to, or ensuring that there is enough regulatory assistance so that customers get financial assistance to actually buy insurance? I'll just leave it as a question and a thought, and
Thank you, Shailaja. Now, Vishal, coming to you. So we have sort of heard about how things can possibly work from the perspective of the manufacturer, from a regulatory framework. As a distributor, how do you see going to the last mile will look like, and how will digital enable it? Because what we have seen till now is pure digital may or may not work, because you need the person at the end of the day to push, or let's say convince for the sell. So how do you see your model sort of evolving as we go down, or let's say as we penetrate more into the Indian market?
Sure. I would like to believe that all of us are very lucky to be part of this decade, right, where basically the entire digital transformation has happened. If you think about, India has one of the best digital public infrastructure in the world. Forget about any this thing. We have done so much of good on basically building on top of, basically if you think about the entire India stack, the mobile penetration. And today, if you look at, we have 550 million registered user base, right? On UPI, there are daily 600 million plus transactions which are getting processed. So India is adopting digital very, very fast, and it will continue to happen if you think from that lens. The right approach to this entire problem statement, if you think about, is that basically can we kind of create a mechanism where basically we can get more and more people into the net. And typically if you think about, what Shailja gave a segue into in terms of the, how do we kind of get more customers into the net? One of the possible approaches which has always worked, if you think about in any digital expansion, is the referral. Now, if you think about that, if you can start saying that customers can generate referrals and basically start giving, start spreading awareness. Now, that's a very, very low-cost CAC. And typically, if you think about, people are doing towards that in terms of spreading awareness, and they're not selling. They're only telling why buying insurance is good. In an era where basically lots of people love to generate content, lots of people are consuming content, right? If you think about, content is flowing like very, very liquid, right? So if you can ride on that, now of course, how do you ride on that? You need to basically incentivize a little bit to that person who's spreading that awareness or spreading that information or spreading that whatever knowledge. If we can somehow enable some kind of referral program for the user base who are basically can say that, okay, I can generate the content and I can send the lead. There's no risk of mis-selling because all they are saying is insurance is good. You should buy insurance. This is the reason, this is the rationale on the basis of which you should be buying insurance. And then basically they come and find the right suitable product which are simple and the customer first, very, very customized for that particular cohort who is basically coming to buy. And I think that's the right way to, according to me, is probably where we can kind of, ride on the digital wave and create the impact and achieve the goal of 2047.
No, thank you. It's very important points. Unfortunately, I think our time is over. But I think one topic we could not cover, and possibly that is where I would request all of my fellow panelists to give the ending notes, because no discussion on distribution is complete if we don't talk about capacity building, training, learning and development, because that at the core of it will drive the channel to sell the right products in the right way. So maybe Ramesh, from you, closing thoughts, and I think maybe we have 20 seconds per person, if you could sort of close it on that note.
Sure. Thank you so much. I represent Insurance Institute of India, so we are into distributor training and also the entire sales process training. So all the biggest challenge today, if you look at, is the distribution strength. We have close to 4.5 million distributors across life and general, 3 million maybe for life and 1.5 for health. And now the biggest challenge would be to transition them from a regular, conventional, traditional distributor to a bionic advisor who has multiple touch points with the customer, who is tech savvy and who can migrate and touch base the customer through various means. So we had initiated many things. We started introducing modules like artificial intelligence, generative AI, where especially about using prompt engineering with chat GPT, where they can reach out to the customer. I think the moment we succeed in migrating the conventional distributor to a bionic advisor, then there lies the entire success, and I'm sure with that we'll be in a position to take it forward. And capacity building, especially organization like Insurance Institute of India have a major role to play here. This is where very clearly we have incorporated all the modules, including digital marketing tools, where every agent can reach out to the customer using artificial intelligence, using digital marketing tools, where he can migrate to become a complete full-fledged bionic advisor. Thank you.
Thank you, Ramesh. Shailaja, your closing thoughts.
I'm going to be very brief. I think training is, of course, supremely important, especially as we move more towards digital age. Not everybody understands people understand the base product, but not all the options, etc., which are available to a particular customer. So if you have trained personnel who are selling insurance, then of course it builds authenticity to what you're selling, and it builds a trust in the product because they've understood what is actually being offered to them. And I just want to say that training is required not only at the sales perspective, but also when it comes to servicing, when it comes to claims, when it comes to within the insurance companies, within the intermediaries at their level, because even from an underwriting perspective in terms of, whether what is being sold is what is actually being, written. And even from an underwriting perspective, for example, a lot of times a person who really doesn't need a particular product is being sold a financial product, maybe when that person doesn't really need it. So is there really, are the salespeople talking to the underwriting personnel? Are they understanding what the customer really needs? Or has the salesperson completely taken the customer for a ride? So so training and a lot of interaction. More than training, I think there needs to be a lot of interaction and protocols in place with checks and balances to ensure ensure that the customers' requirements are key. And this needs to be at all levels, even at the board level, I think, of insurers. There should be a proper training in terms of, corporate governance and data protection and so on and so forth. Thanks.
So from a capacity building perspective, I would say it is a fundamental challenge for the insurance sector. I would put it in two parts. The first part is when we look at the frontline sales or the agents, how do you build capacity in an environment where the attrition rates of your teams could be as high as 100%? One of the data I saw a couple of months ago was that in India, only 5% of the insurance agents survive after 5 years. So you have to build capacity faster than their speed of getting demotivated with the industry. If the people whose capacity we are trying to build, if they feel the industry is not right for us and they leave it in between, before they have the chance to build their capacity, they have already moved out of the industry. That I would say is the key challenge. How do you accelerate capacity building faster than their ability to get frustrated? The second part I see is that given the rapid change that is happening all around us, rapid change in terms of, I think since the morning we have been talking about things like cyber security, data security, we have been talking about analytics, building new models, capacities. All of that again needs a talent of a very high order. So unless insurance industry is an employer of choice, how will you get such a talent that is being sought after by every single industry? I would say that is again a very fundamental problem for the insurance sector to look at it in a strategic manner to make insurance an employer of choice. Otherwise, you know that you have to do something on technology, you know you have to do something on cyber security, but unless you have the talent in the industry to do those things, how will you do that? So that I think is the two parts of capacity building I see.
I think lately we started with this multiple product platforms becoming more successful. But to handle multiple products, you need far more equipped and be trained to handle multiple products. So I think gradually our sellers or insurance product distributors will have to understand different other financial products, because there's sometimes at times comparisons happening. At times the customer is trying to understand how he should allocate his portfolio or what proportion of the portfolio. So I think these kind of training will start becoming very important. And earlier one training which was given at the beginning, used to carry the agent maybe for 10 years, 15 years, and he was requiring very little training thereafter except for the new products. But now I think with the technology changing, how to use technology and how to explain things and engage customer, because some gamification and all these things are happening. And short videos and all those things where he can kind of handle all those things sitting at one place and maybe engaging a customer online. So those kind of technical enablement also will have to be done. So I think that way training will evolve in a very different manner. Earlier, if it was lasting for 10 years, 15 years, maybe it is now every 2 years, 3 years. Even the best and the most smartest of the guys will have to undergo another round of training or equipment.
Vishal, your closing thoughts.
See, insurance is a legal contract, right? And Shailja will agree that it requires lots of training to explain something which is legal in nature, right? So I think training is very much needed, and I think once someone understands what is behind the making of those complex contracts, it also basically allows or enables them to kind of explain the construct very in a simplified manner, and that is very, very important. The second part of it, if you think about from a technology evolution, AI, I would like to call it as augmentative intelligence. I think more and more people will be able to use that and to be able to kind of do it in much more proficient manner. And the third point which I would like to add is that typically if you think about it, has to be fixed at the grassroots level, right? What Pankaj said about that the talent has to be made available, which means there are courses which must be introduced at academics level, right from basically school to the your graduation level, so that more and more people understand about this particular segment, which otherwise looks very daunting from the outside, right? If people have better understanding of the sector, there will be more excitement around it and there will be more participation.
No, so thank you. And I think we are short of time now, but thank you so much, everybody. I think it was a great discussion. So we sort of looked at what would be the models of the future, and in short, what will be needed from regulatory perspective, from capacity building perspective, so on and so forth. So once again, thank you so much. Thank you so much for being in this panel.
Thank you, speakers.